everyone, Darko here for your weekly video. Today is Wednesday the 3rd of November 2021. In today's video I will be talking about how you can benefit from your from the yearly chart for your long-term trading. Okay, before I do so, I want to make sure that you follow us or follow me on LinkedIn. Make sure that you send a friend request if you so wish, and this is our YouTube channel. Make sure that you follow, and this is Twitter. Search for @FX Coaches Corner, and that is the same for Facebook. And last but not least, make sure that you listen to our podcast, Forex Trading Coach Podcast, where I'm talking about my trading journey and all the mistakes that I did for a decade before I become a professional trader. Okay, so let's start with today's session. Just have in mind that I am not trading the yearly chart, and you might say, but geez, do I really need to watch that time frame? If you're long-term trading, there is some very useful information that you could be having a bias for that current year. Okay, I have marked some of the pairs. I won't be covering all of them, just some of them. So let's start with Aussie Yen. Okay. Would you agree, and this is obviously the yearly chart, okay, so would you agree that this level in here is a strong level of support? Okay, price comes down into this level, like when price is heading down into this level, and most of these moves was when the corona broke out, so there was some extraordinary market conditions and everything. Nonetheless, this level was holding, so, and it's the same in here. The last year's candle action was 100% bullish. This year, waiting for a bullish movement and hold into these trades long term would be to prefer, because the previous monthly candle, yearly candle is bullish, and price is probably heading into this level of resistance. Okay, so if we mark this level in here, okay, and all of a sudden this level makes total sense on the monthly chart as well. It's a heavy level of resistance. Okay, so, and we are heading down down to the end of the year, and it's just like two monthly candles left, and then we will have a fixed yearly candle. We could see like a retracement, a correction move, and then a directional move, or maybe we're just heading up into this level before either breach this level or hold this level for a while. And this is where the monthly and weekly chart comes to in work. So in this specific case, price have a very bullish candle action, and price is retracing back. So by knowing this, you will prefer to look for a weekly pullback into any level of support for further upside hitting this level. Okay, and obviously you time those entries like I do on my daily and my 4-hour chart. Okay, CAD Yen, same in here. This, would you agree that this level is a strong level of support? Well, price hits that level to the pip. Okay, like I said, there's like no pending orders in here with any low stop loss or anything. Just like when price hits that level, you go down to your monthly chart, weekly chart, and you do your absolute best to try to look for a long opportunity. And when you are going against the yearly bias, which I do very frequently, then then it's just like a different type of money management and trade management. So when you are trading in alignment with the underlying trend, then you just leave that trade alone and make some money. And when you are trading against the underlying trend, it could be a monthly trend or a yearly bias, when you are more like hands-on, or at least more careful, like when to take profits and how to protect yourself, so you don't make having a winning trade end up losing. Okay, and it's the same in here. Let's see, would you agree that this level in here is a strong resistance? Well, look how we held for several years. Okay, we touched that level perfectly, we held that level even more perfectly in here, dropped. Where do we go down to? We looked left. Okay, and if I put this level in here, look how the first touch back held perfectly, the second touch held the second one. Okay, and if we ever have a third touch, well, this level is perfectly holding as well. and now we are at a level where price is do or die. Like, is price breaching this level, holding this? Because we are here right now. Okay, so if you see a monthly breakout, like if the monthly candle like retraces down like this and then we close bullish and then bullish, well, all of a sudden we broke that level. That means at some point we will have this retracement down in here, and then we will be doing something like that. And you can plan this by seeing these yearly levels, and obviously price is heading up into this level, and there's plenty of money to be made from here to here. Will that happen right away? No, we don't know, because once this candle is fixed, then we need to build a game plan for how to interpret that yearly candle into a pending order, basically going down to the monthly and weekly, and then converting the weekly and monthly into a pending order on your daily chart. And if sometimes the weekly chart gives you clue like how to enter, then if it's only like a weekly level, then go down to the 4-hour level. So you can basically swing trade yourself into a position trade and see this as an long-term investment. Okay, Pound Aussie, this is another, and I'm not cheer picking these pairs. You can go back and watch all the 27 pairs. You will be amazed how well this is working. So this hits the level of resistance, okay, and then price drops. Well, how did we benefit from previous year's candle action? When we have a bearish candle action from resistance, and we have this neckline, okay, and this neckline was also a strong level of resistance on a monthly chart. When price retraces back into this monthly level, we also have a monthly pin bar reversal. Okay, this is how you convert, and this is actually a trade we took. I pointed this trade out in advance, okay, way before price dropped, or way before price got there, by only converting what I'm saying, teaching you in this session. So price hits this level. My long-term bias was short. Price is confirming my bias by hitting this resistance and giving me a bearish pin bar reversal, and then I go down from the yearly to the monthly, from the monthly to the weekly, and on my weekly chart I had a weekly move. Okay, that's one of the things that I'm waiting for, a weekly move. Okay, and does this look like a school example of you could call it like head and shoulder, or in my case it was a rotation. Okay, price goes up into this level, this neckline, this weekly neckline, which was also daily neckline, was the entry. I'm not kidding you. Okay, with the high stop loss, and this was the target in here. The rest is just hindsight. This level was the target, because this is also identical with this level in here. Okay, and like I said, it is in the PMA when I'm talking about this way before price gets, and this is what I mean. This is how you convert. I'm not trading the yearly chart by any means, no. But I'm converting that into a daily pending order, and I just leave that trade alone. Let the money work for you instead of working for money. So this is pound dollar. Let's this is a heavy level of support, no doubt about that. Price hits that level perfectly and close as a strong pin bar reversal. Okay, and if price hits these levels of resistance, what do you think price will be? Like, we barely touched that level and we dropped. Okay, so this is a heavy level of resistance, and you can converting this. Look how beautiful this looks like on a monthly chart. Okay, and once price gets there, you wait for a monthly candle action, you wait maybe for a weekly move. I have specific approach. I'm not teaching the approach in here. That's within the paid membership, obviously. So this is what I'm looking for. So let's just cover a couple of more trade. Look at this beauty. This is Kiwi-Yen. Would you agree that this is a smashing support level? Well, yes, of course it is. Price hits that level to the pip. Okay, to the pip. But you might say, but hey Darko, how can I enter here? Well, that's your job to find, once you have, like when everyone was like thinking bearish, the weekly chart was dropping, the monthly chart was dropping, and the world were panicking from the pandemic and everything. If you just keep your head cool, and by watching the yearly chart, the monthly chart, it puts you in a position very few traders are. Okay, because these levels are watched by institutional, by banks and everything. These levels are like heavy respected level. And this is the thing, most struggling traders, like the highest time frame they watch, it might be like the hourly chart or the 4-hour charts, or maybe the daily chart. Most people just focus on a 1 minute chart, or tick chart, or 5-minute charts. And obviously it depends if you're micro scalping or scalping. This video will not be useful for you. But if you want to see the bigger picture, because whatever you are doing, you can just benefit from this. Let's just say that you're scalping and price hitting a yearly level, and you see some evidence on the daily chart or weekly chart. Well, maybe you should be looking for scalping longer opportunities, and you can scalp yourself into a day trade, or maybe day trade yourself into a swing trade, and just adding into that position for the rest of the year, and scaling obviously along the way. Okay, so regardless of your trading style, I wouldn't say this is a useless information. Obviously it's more suitable for those who are long-term trading, but I see a benefit from a short-term trading point of view as well. Same for Kiwi dollar, very respected level. Price hits that level, you could be looking for a longer opportunity, and now is where your patterns that you are trading, or pattern, comes to work. What pattern are you trading? What game plan do you have? How do you approach the market once price hits that level? Same in here, when price hits a level like this, or maybe a level like this, and then you just convert that level into a monthly level. Okay, because I see right away that this level in here is a very strong monthly level. Okay, and then obviously there are several other pairs or levels as well. I don't want to make this too long. This will be the last pair. USD yen, a very beautiful correction back into a double yearly neckline. Held the first time, the second time held to the pip, and basically the rest is history. And there were several great options to actually take these trades. Like if I just mark this level in here, okay, you have a bullish weekly candle action, and look how beautiful this looks like. The same way we traded that pair, this was also a great looking pair. Let me just grab my pen for you if you don't see it. When price gives you a rotation, a lower low, lower close, and then we have a higher high, higher close. Okay, price comes down into that weekly neckline to the left, and the rest is history. Okay, so this is the beauty of actually starting with your yearly chart and working yourself down into a pending order. Okay, and this is also the stress-free type of trades, when you don't need to micromanage things. Geez, we all have like obligation. I just don't know how I could be day trading for like almost 14 years. Very stressful, and I'm actually making more pips than ever right now, and I'm spending less time in front of my computer, and I'm actually spending more time with my family and just taking care of myself. So this is a fantastic way of trading that suits me, at my level of the phase that I'm in right now in my life, when I'm actually want to take time to do other stuff than just sitting at my office and trading. I'm still trading, but I'm trading more like hands off. Okay, hope that makes sense. If you like this video and want to encourage me to more of these for you, I would appreciate very much if you hit the like button and share those on your social media. Thank you so much for listening, and I talk to you soon. Cheers.